All right, I think I am already live. So today we have come to our episode 4 of You Can Achieve or YCA. This is where we are teaching business, the basics of business, uh, the things you need to learn to solve a case study, to solve a business problem, to solve a real life problem, and so on and so forth. So, for the last few episodes, or in the last few episodes, what we have discussed is basics of business. In the first things, what is business and what are the problems we face in Bengal, in India? If you want to take it global, what are the problems you can face? What are the environments you have to face? And your strengths and weaknesses, your opportunities and threats, how you are using the pestle framework so that you can look at different aspects of the environment in which you are actually like creating the business, if you are creating from scratch, because mostly we are talking about entrepreneurship. Today we will talk about different types of business: family business, succession planning, entrepreneurship, and all these things, incubation we will talk about. But mostly we are focusing on entrepreneurship, especially if you are thinking about the media and entertainment industry, that you want to do something regarding music, maybe publishing, print media, maybe radio, maybe your media and entertainment, television, maybe it can be films, it can be journalism, whatever it is, media, entertainment, media, communication. If you want to make a mark in that industry, if you want to build a business from scratch, or you can become a YouTuber also, you can think about all these aspects. But I will say you can have a lot of ambition so that you can create corporations, so that you can employ other people, um, who you can provide financially, spiritually, and that's a great thing, that's a great ecosystem to have. Then we can improve our economy, and we can go towards a developed economy very soon. So we need to contribute to that economy. Right. So before that, if you want to build a business, I am talking about different functions of business. And just before everything, I will do in a very like I will switch back and forth, and you will realize that there will be different. There will be just a second. I will just switch off my camera. Yeah. So you will see that we will talk about some very fundamental concepts of business, the terms you come across, but I'm trying to build a bigger picture or paint a bigger picture so that you understand how these individual terms fit together to create a business, to maintain a business, to sustain a business, and all that stuff. So just to start with, I will talk about different things. Just give me 1 second. Yeah, this is much better. We had talked about your return on assets, and you have heard of it, but still you have some asset, you want return on your assets. How you do that? You're doing something, you're giving input, you're having a process, either you are manufacturing or entrepreneurship also. There are different kinds of drivers and outcomes. Sometimes they are contextual and other as well. We'll talk about that. But today we'll talk about the functions of business a lot. Because if you look at business in a very broad context, or even a broad level, from a very broad level, আমি বলেছিলাম dragonfly view and all that stuff, a bird's eye view, if I say. So eventually it becomes like this. This is where you are actually doing a lot of activities, operations, productions, management. You are having inputs. I talked about value chain, right? I talked about value chain. So your inbound logistics, I talked about the outbound logistics and all that stuff. Today I will talk a bit about Christensen, who talked about disruption, innovation, and all that stuff. But before that, you need to understand the 5 forces. You need to understand the value chain. So if I talk about the value chain, we have got the suppliers, the input, inbound logistics, outbound logistics, and here you are actually manufacturing or providing the service. Now, in this broad level context, you are having all the functions of business. What are the functions of business? Broadly, if I say, I have already talked about in the first lecture, I think, marketing, you're having finance, you're having human resource, HRM, you're having productions and operations management, many other things. Right. Broadly, this is like data analytics, um, business analytics. You can have different names for that, but ultimately it comes in your business intelligence part, or it can be data warehousing, it can be data mining, and all the stuff. And you do supply chain management, ERP, and all that stuff. So supply chain management is there, your ERP, etc. In that thing. So that's a common thing you have in POM and data analytics, in both all these things. So here you are manufacturing, providing the service. Here you are analyzing the data, and you are getting information from the data. So we will talk about big data. We'll talk about artificial intelligence, deep learning, machine learning, big data, and all that stuff. Where you are actually analyzing the data. But if you talk about the human resources, it's broadly it's about the people. People are your assets. I talk about the human capital. Finance, when you are talking about, this is financial capital, right? When you are talking about marketing, then you are talking about the 4 P's or 7 P's I had already talked about. 4 P's or 7 P's, etc. So you are either manufacturing, or you are in the service industry. Whatever you do, you are providing something to the consumer or the customer, or you are providing something to the customer, and maybe your consumer is a different person or the same person. It depends. But IMC is a big thing in there, in this context. Integrated marketing communication. Just give me 1 second and I will. Yeah, so integrated marketing communication, that's a very important thing to understand, because when you're talking about the marketing part, so you are having the product, you are having the pricing, you are having the placement of the product in the marketplace, and you are doing the promotion part. So when it comes to the promotion part, you are actually talking about the integrated marketing communication, mostly. So you have different ways of doing the marketing, and you are doing the communication. So communication is one thing you cannot ignore. And here mostly business communication. So communication is something you cannot ignore. And there is another thing, which is strategy. Now strategy, you depending on the different levels, you will have different things: strategy, tactics, different levels of strategy we discussed in the last episode. So these are the basics you have to keep in mind. Okay. Okay. But if you talk about in terms of finance, you're getting that many people think that profit maximization is one term we have learned. Whenever you are doing a business, you are thinking about the profit maximization. So ultimately, what you are doing some kind of selling, like you are selling in the marketplace. That is giving you revenue. That is giving you revenue. So you are selling something. It can be goods, it can be a service, whatever it is. You are selling, and the sales is giving you the revenue, right? So revenue is sales, similar things. But two terms you need to remember here. We talk about ROA, and we can talk about ROE also, return on equity. We'll talk about this also. Equity, we'll talk about the risk equation to weighted average cost of capital. So I will just briefly mention all these things. Two things you have to remember, very important terms: gross margin. What is it? This is your gross profit versus by the sales. When you are incurring a sale, or when you are having your sales, then you are making some profit, right? So how do you calculate profit? Very basic equation. You are selling something, you have incurred some cost. It can be a fixed cost or it can be a variable cost. Now let me tell you what is a variable cost. This is depending on the units, the number of units. And fixed cost is fixed, like a plant, etc. These are the fixed costs, right? Or something similar. These are the fixed cost, and variable cost is which is depending on your units. Now there is a thing called contribution margin. You need to understand what is the contribution. What is the contribution? You are dividing the fixed cost among the units, if I say it in a very gross way, because in the variable cost you will actually distribute among the units, but if you look at philosophically, it is actually the fixed cost you are distributing among the units. So that becomes your contribution, right? I will give you the equation, and the thing you need to understand is break even sales. What is break even sales? Break even sales. So what is break even sales? Your QB, Q means the quantity. So that is your break even sales when you have the fixed cost divided by contribution per unit, right? And your break even point, talk about this is your fixed cost divided by P by V ratio, right? And if I talk about one thing called the margin of sales, that is your profit divided by P by V ratio. Okay? Now, what is the P by V ratio? C by S into 100. Your contribution, your sales, you divided these two and you multiply 100. That becomes your this thing. Your and what is the contribution? Let me tell you here. Your sales and you have cost. So this is your contribution. And when you talk about the contribution per unit, you are just dividing it by the number of units. This is divided by number of units, and you get your contribution per unit. You divide the fixed cost by this and you get the break even quantity. This is your quantity, and the break even point, this is your fixed cost divided by P by V ratio. So P by V ratio, this is your P by V ratio. This is your P by V ratio, contribution divided by sales. Now your gross margin, you remember this gross margin is your gross profit divided by sales. When you talk about the net profit margin, generally only profit margin, this is your net profit divided by your net sales. You can have all these things in your accountancy, finance, managerial accounting, financial accounting. So all these the statements we talked about, managerial accounting and all these things, cost accounting. When you talk about all these aspects, you will realize ultimately it is coming down to this. You're having a business, for example, you are having an input, right? So this process is having a cost involved. So that is your cost. Unit এর ওপর যখন ডিপেন্ড করছে, that is your variable cost. For example, if your number of units is n and if your variable cost per unit is v, then your total variable cost becomes capital V. If I want to tell you, this is the number of units. ঠিক আছে? তাহলে fixed cost plus variable cost is your total cost. Fixed cost plus variable cost. এবং এই fixed cost এর সাথে ভ্যারিয়েবল কস্ট যখন বলছি সেটা হচ্ছে আমার n ইন্টু এই স্মল v। আবার যদি আমি টোটাল এটা যদি দেখি তাহলে এটা হচ্ছে আমার কি টোটাল কস্টটা। এবার টোটাল কস্টটা তখন আমায় দেখতে হবে পার ইউনিটে কি হচ্ছে। নাও টোটাল কস্ট আর টোটাল রেভিনিউ এটা কি সমান? এইটা নিয়ে এই পুরো এই ধর্মটা হয়। ঠিক আছে, এইটা হচ্ছে আমার ফাংশনসটাকে আমি কিভাবে কাজে লাগাবো। তাহলে মার্কেটিং, হাউ আই এম টেকিং মাই প্রোডাক্ট টু দ্য মার্কেট প্লেস, হাউ আই এম ইউজিং দ্য ফিনান্সিয়াল অ্যাসপেক্টস, সেল হচ্ছে, প্রফিট হচ্ছে কিনা, আমার কতটা প্রফিট হলো, গ্রস প্রফিট কত হচ্ছে, গ্রস প্রফিট থেকে নেট প্রফিট যাওয়ার জন্য একটা স্টেট আছে, কিছু জিনিস হয় যে গ্রস প্রফিট থেকে কিছু কিছু মাইনাস 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 করে উই গেট দ্য নেট প্রফিট মার্জিন। When we talk about the financial statements, we will talk about how we get that. Minus this, we get the net profit margin. But ultimately, just broadly, you understand gross profit by sales. You have made some sales and you have made some gross profit. The ratio of these two is your gross margin. So margin is one term you will like hear a lot in the business scenario. Net profit margin or your profit margin is your net profit by net sales. ঠিক আছে? Done. So your gross profit, then your operating profit, then your net profit. This is the scenario. And here is your operating profit also. Your gross profit, your operating profit, and then you get your net profit. And that comes from the financial statement. So when we talk about that, we will talk about all these things. Acha. So I'm done with this. এখানে জাস্ট লেট মি মেনশন ফিউ থিংস। কিছু গ্যাপ রুলস হয় যদি ইফ আই অ্যাবাউট দ্য অ্যাকাউন্টেন্সি অ্যান্ড দ্য দ্য financial aspects of the accountancy part, then there are some gap rules you have to at least understand the meaning of it. Broadly, what it means is your earnings is not equal to cash. Your accruals is not equal to cash. Your book value is not equal to your market value. Your accounting cost is not equal to your economic cost. Very important. We will come to marginal utility, marginal cost, and all that stuff. Your economic cost. This is very important. Your accounting cost is not equal to your economic cost. Understand these things. Then we will talk capital and all that stuff. Okay, so let me just clear the screen and then I'll move to the next whiteboard. But is it visible? Let me just, yeah, perfectly visible. I think I had discussed about capital budgeting. There you have your IR stuff to actually looking at whether a project is good for investing or not. But I will just give you the basics of accountancy also. So if you are thinking, there is a thing called recording, where you are recording the things. This is before the financial statements, when you are actually recording your transactions, what you have incurred during the business process. So your recording will think about your journal process, bookkeeping, You will classify. Classify will be the ledger. You do the ledger. Now you summarize. When you do the summarize process, you are doing something called a trial balance. Then you are actually reporting. When you are doing the reporting, you are having a trading account, profit and loss, balance. I hope this is visible. Yep. Then you are interpreting the statement. You are interpreting the statement. ঠিক আমি বলছি why I discussed in steps, because it's like writing, but you are writing, you are using the words, and in this when you are recording, journaling, bookkeeping, you are doing the transaction, financial transactions. You are making, suppose you have paid this and you have received this and all that stuff. So debit and credit we will talk about later, but first you understand the broad aspect of it. Interpreting, when we do the interpreting, we have the statements already in our hand. Then what we do the ratio analysis. Capital gearing ratio, you have the current ratio, you have the quick ratio, right? You have the capital gearing ratio, and then there are different ratios. So I will do one session on ratios only, etc. So this is your ratio analysis. Then you have your fund flow statement, right? And your cash flow statements, and they are together. Cash flow statement. So this is how you can look at business financially. So accounting, you do the interpretation. Now there are three kinds of, I won't discuss in detail today, but you just understand: nominal account, real account, and personal account. These are the things. I will do one session on account and finance where we will talk about all these things. But this is where you actually play with the financial aspect or the accounting aspect of the business transactions. Okay? So this is your accounting process. So if I talk about one function, what you have to understand, this is your finance, accounting and finance. Right. Then we will talk about investment banking and brokerage. We'll talk about portfolio diversification, portfolio management. But before that, we will talk about the risk, because when you are doing the portfolio diversification, you are actually distributing your risk. So what are the things you have to keep in mind? Accordingly, you will diversify your portfolio. So before that, you need to understand the risk, right? Risk-free rate, beta. We will talk about all these things. But you understand this is your basic accounting and finance. Now why I am mentioning this again and again, because in the universities, or in many universities or in many schools, what you get is, they start with trial balance. You did T accounts and they do this trial balance. They start with the ledgering profile and all that stuff. They start with the balance sheet, they start with the cash flow statement, but you don't know how the actual process is happening step by step. So first you record, journal, bookkeeping, then you classify, ledger, then you summarize, trial balance, then you do the reporting, trading, profit and loss, balance sheet, whatever it is, your statements. Then when you have the statements, you are interpreting that statement. Suppose somebody, when you are doing the financial accounting part, then you are looking at the you are thinking about the statements. We talked about balance sheet, profit and loss, income statement, and all that stuff. But when somebody is looking at the statements, they want to know whether the business is profitable or not. They are not concerned about making those statements. They might know that when we are talking about the balance sheet, they might know, I know two things. Kiyosaki teaches in this way, that your assets and liabilities, these are the two things you need to keep in mind, right? Assets and liabilities. Now I know my assets and liabilities, how they are performing, snapshots we talked about. Now, statements I have in front of myself. Now, how do I interpret those statements? Then we talk about the ratio analysis, fund flow statement, cash flow statement. You see the how the cash is flowing. The cash flow statement, how the fund is flowing. What are the ratios? Suppose 2:1, 1:1. This is giving you an indicator whether the business is performing well or not. You are not concerned about the statements. You are looking at the statements. Somebody has already prepared the statements. You are just auditing, or you are looking at the ratio. You are taking some managerial decisions and all that stuff based on the statements, right? So this is the entire step. Now we will move to the stakeholder map, which is also very important. Just give me 1 second. Let me see this, and then we'll come back to the next part will be stakeholder map. So if I keep talking about it, it's like you have your core part where you are actually focusing on the core aspects of your business. Then you have your primary stakeholder, then you have your secondary stakeholders, right? So depending on that, you we talked about prioritization, and we will talk about a metric, like a quadrant also. You can divide in terms of power and interest, and you can have 4 quadrants depending on that, and you can decide how you're going to manage these people. So yeah, it is already there, and let me just tell you 2 aspects of stakeholder mapping. Broadly, it's like the paid environment you talked about. That's a part. Your internal customers are your part. Your employees and other people, managers and all, and your environment, your trade unions, your employees communicate. And now how you put them in different concentric circles. Some are primary, some are secondary, but eventually it's like your firm is operating, and there are different people there who have stakes in your company. Now they are primary stake or secondary, your core part of the firm consists of employees and other people, or the operations of the firm. So accordingly, you do concentric circles, and you see that who are the primary stakeholders, who are secondary stakeholders, and what is the core part of